get a saw, babe. You get a whip and I get a saw. One good trend pays for 'em all. Honey, trader, baby, mine. Now what do we do when we catch a trend, honey? Hey! What do we do when we catch a trend, babe? Whoa! What do we do when we catch a trend? Ride that trend right to the end. Woo! Honey, trader, baby, mine. Well, what do we do when we show a loss, honey? What do we do when we show a loss, babe? What do we do when we show a loss? We keep that daggone loss to toss. Honey, trader, baby, mine. So you get a whip and I get a saw, honey. You get a whip and I get a saw, babe. You get a whip and I get a saw. One good trend pays for 'em all. Honey, trader, baby, mine. Well, how do we know when a risk is right, honey? How do we know when a risk is right, babe? How do we know when the risk is right? When you make a lot of money and we sleep at night. Honey, trader, baby, mine. Well, what do we do when the price breaks through, honey? What do we do when the price breaks through, babe? What do we do when the price breaks through? Hold our stops are in, there's nothing to do. Honey, trader, baby, mine. They flash the cars, they promise the gold. They hide the fills while the stories get sold. Screenshots crop, no losses shown. Pay up front just to be shown the code. Show me the trade, show me the scar. If it really works, why guard it so hard? No secret rooms, no velvet lines. We learn in public, one chart at a time. You get a whip and I get a saw, honey. You get a whip and I get a saw, babe. You get a whip and I get a saw. One good trend pays for 'em all. Honey, trader, baby, mine. What do you do when the drawdown comes, honey? What do you do when it gets real big, babe? What do you do when it's even bigger? We stick to the plan and pull the trigger. Honey, trader, baby. Now what do we do with a hot news flash, honey? Nah. What do we do with a hot news flash, babe? Oh. What do we do with a hot news flash? We stash that flash right in the trash. Honey, trader, baby, mine. You get a whip and I get a saw, honey. You get a whip and I get a saw, babe. You get a whip and I get a saw. One good trend pays for 'em all. Honey, trader, baby, mine.
Good morning, Outliers. How y'all doing? Hope you had a great weekend. It was a birthday weekend for Mrs. Ewell, so man, we had the best time. We had Friday, Saturday, and Sunday things going on. Her number one favorite thing we did was we had a group of 10, and we went out to brunch, and I bought everybody drinks. I'm like, everybody get liquored up because we're gonna have a good time. And we went to this place close to us called the Game Show Experience, and she had the very best time. Let me tell you. She told me afterwards, she's like, this is something I've always wanted to do. This is her living out her childhood fantasies of being on game shows. So she was so stoked. But it's great to see everybody. I'm gonna see Kostya later today. Can't wait to see him, my friend. But it's great to see everybody like Chuck and Nomad and Juan Pipo. Great that everybody is here today. We're gonna watch a video on the Big Money Bingo Day. Oh, I gotta get my bingo card ready. Hang on. Gotta get my bingo card is not ready. I forgot about the bingo card. Hold tight. Gotta get the bingo card ready. Which just means I have to like clear it off from the last time we had Big Money Bingo. Hang on. Where's my bingo card? There it is. All right. So on Big Money Bingo, the objective here is to give away as much merch as possible. Now I need you guys to help me out because we're going to watch this video. We're going to find all of the best lessons we can from this video. And as you guys know, Manny runs the bingo. So if you see something, put it in the chat. But I'll be looking for Manny first off. He's the man. This is Big Manny Bingo. Big money, Big Manny Bingo. That's right. All right. Quick notice, real quick. Literally everything I own has a buy signal today. Even the Qs has a buy signal today. So I like where that's going. But we're gonna watch this video, and let me hit the hook over here. Let's do this. So I'm competing in the US Investing Championship this year, and this video is from one of my very favorite channels to watch, Financial Wisdom. They are showing the pullback strategy that helped Martin Luke win the US Investing Championship. So I want to watch this with you, and let's learn together.
Hi all. In today's video, we break down the pullback trading strategy of the 2025 US investing champion, Martin Luke. Martin Luke is proving to be an established trader. Despite suffering a brutal 50% drawdown early in his trading journey, Martin continued trading, refined his approach, and eventually dominated the US investing championship with a reported 969% return in a single year.
Hang on. I feel like we watched this. Did we watch this? I'm very confident we watched this. Let's do a different one, because I know that he put out more recently. That was from May 29th. I thought it was further on. This one I think would be cool because Christian Flanders, we actually talked to him. So give me just a second here. Johnny said we did watch this one. Okay, cool. Let me pull up the video of Christian Flanders that I can use in the background. Hold tight.
Hi all. In today's video, we'll break down
because we had a great chat with Christian Flanders. Okay, my button's working now. That was weird. For a minute, when I pushed my playlist button, it would not work. It would say like YouTube is blocked or something weird. But yeah, we got Christian Flanders here. Hold on. Right here. Okay, cool. Got it. So let's try that again. We recently chatted with a trader named Christian Flanders, and he is an exceptionally well-educated trader who transitioned from the world of poker, professional gambling, into professional investing. Now, we're going to watch this video together talking about Christian Flanders, the VCP pattern. Nobody's talking about Christian Flanders' strategy. And if you want to see me and Christian Flanders having a chat, just go over to my playlist, go to the Champion Trader series, and you'll see Christian Flanders right there. So let's watch this together.
the trading style of one of the standout performers in the US Investing Championship, Christian Flanders. In 2024, Christian delivered an astonishing 433% return, finishing in second place, just 15 percentage.
Can you believe second place is 433%? That's some stiff competition.
Points behind the champion. He followed that up with another exceptional year in 2025, generating a 167% return and again securing second place, this time in the Money Manager division, while managing more than $1 million in capital. Combined, those results translate into a staggering 1,323% cumulative return over just 2 years, an achievement reached by only a handful of elite traders. Drawn to poker during his college years, Flanders spent more than a decade playing the game professionally after a brief stint at a security tradings firm early in his career. When he eventually made the transition to full-time trading, he was still a student of the markets, learning the craft from the ground up. The journey was far from smooth. A series of painful drawdowns early on exposed weaknesses in his approach and forced him back to the drawing board.
And this right here is incredibly common. Now, I've blown up my account twice. I don't know exactly what happened with Christian Flanders, but that's okay. The point is that you don't have to let setbacks hold you back forever. In fact, the statistics, the industry rule of thumb is that 90% of traders lose 90% of their accounts the first 90 days of trading. That happened to me twice. If it happened to you, it's pretty common, okay? But what you do after that point is what matters. What you do at that point is what matters. So, because I want you guys to have the right mindset, I'm going to give you mindset over here on the bingo board. Now, how are you going to win bingo today? Well, the easiest, fastest, bestest, and only way to win bingo is to put #outlier in the chat, because that is how you get into the system. Now, here's the thing. It only shows 51 entries. We got nearly 300 people watching right now. That means a ton of people who are watching have not put hashtag outlier in the chat. And if you have already, go ahead and do it again, because maybe the system didn't recognize you the first time. Maybe the system didn't recognize you the first time. So go ahead and do it again as we keep going.
Determined to improve, he immersed himself in charts, studied countless trading books, and dissected every nuance of swing trading. More importantly, he became obsessed with risk management.
Okay, let's go back slightly. Right, getting that obsession. Right, I've told this story before, and it's entirely 100% true. There was a day where I had to sit down with myself, and I said, "Self, one of two things is going to happen first. Either I'm going to die, or I will be a profitable trader. Those are the only two outcomes in my life." And I kid you not, I was deadly serious on this. That was exactly precisely the moment that I had you have to decide. One of these two things will happen. Thankfully, I chose the latter, where I got to be a profitable trader first. But it's going to take that level of commitment, because this is the hardest game in the world to play. This is the hardest way to make an easy dollar. This is the hardest game in the world to play. Now, Outlier makes it infinitely more easier for just 82 cents a day. But you have to actually put in the work to be successful. Right? It's not the Lambos that all the fake trading gurus want to flaunt, right? And trust me, as somebody with money, the last thing I want is to be more of a target, right? I don't want to be seen. I want to just enjoy my life, enjoy the finer things in life without causing a ruckus. But to the other point is that in order to have that lifestyle, you have to do so much work to make it happen. It doesn't. One of my favorite quotes, I don't know who came up with this, so I'll take credit for it. Success doesn't happen on accident. If you want to be successful in the stock market, you must treat this as if this is your brand new career. Okay. Now, when you were going to college to be a brain surgeon, when you were going to college to be a teacher, when you were going to college to be a banker, whatever you were doing, right? Did you take a 2-hour course and be like, all right, I got this, let's do this thing? Nope. You had years of dedicated study. Years of dedicated study. I just want to make the money. I know. But you're never going to make the money unless you learn how the market works. Right? And that doesn't mean that you're going to win every trade. Not at all. What it means is that you're going to understand that all stocks are bad. Every once in a while they act right, and your job is to ride the trends when they're there. Your job is to buy the rip because you have no idea how high the rip is going to go, and to not buy the dip because you don't know how low the dip is going to go. There's so many things that we teach here on this channel, and you need to subscribe if you haven't done so already. But you must have that unbelievable level of consistency and discipline to make it happen. I'm going to give you that because that's the fallacy. That's the fallacy. It is the hardest way to make an easy dollar. But when someone looks at what I literally do for my day job, they see me click a buy button, they see me click a sell button. Is that hard? Nope. It's way easier than brain surgery. Right? It's way easier than dealing with 30 snot-nosed kids. It's way easier than walking into let's say you work in local government and zoning and planning. It's way easier than any of that. But it's the mental part that is extremely difficult, that most people, 99% of people cannot do. They absolutely cannot do. And that's why the attrition rate, the failure rate of people who want to be professional investors is so high. It has nothing to do with the click and buy and click and sell. It has everything to do with the game between your ears.
Charts, studied countless trading books, and dissected every nuance of swing trading. More importantly, he became obsessed with risk management, developing a framework designed to limit losses during difficult market environments while positioning himself to capture outsized gains during favorable ones.
Okay, now one of my favorite things to say is you have to cut your losses short and let your winners run out of control, which is the exact opposite of what happens to most people. Why the attrition rate is so high? It's because they let their losers run out of control, and then any little profit they get, they try and take it off the table. In fact, the conversation I had with Christian Flanders in this video right here, go to my channel, go to the Champion Traders playlist here. You'll see me and Christian Flanders. him talking about specifically, he had a humongous winner in NVIDIA. It had doubled his account. So 50% of his portfolio was in one stock because it had doubled his account. That makes sense. And he said specifically, I couldn't hold it anymore. It got too big and I just had to take it off. And I'll never forget the conversation with that, because I was like, but why? Did you get your sell signals? And he's like, no, I just couldn't mentally handle it. And I was like, but you didn't get your sell signal, so why take it off? And then he said, have you ever had a trade get that big? I've had some big trades, right? And he's like, when you have a trade that is huge, the amount of uncomfortableness that you feel with those winners, and if you haven't had big trades, the amount of uncomfortableness you're going to feel sitting on those winners is real. It's so real. It's as real as you putting hashtag outlier in the chat. It is unbelievably real. Senior Wahoo, he's one of our Bravo graduates in Bravo University. He said G5 and O3. G5 over here, and he said O3 over here. And Bravo, what in the wide world of sports is Bravo? Well, we have a complete Outlier University playlists, which is where I had students in both the Alpha class and in the Bravo class. And we had these students live in class, and I taught them everything that I could possibly teach them about trading. And Charlie class is going to happen this fall, which I'm very excited about. And Mark, I know Mark is here. Mark's right here. Chris, I don't see Manny, but I think he would say G5 in 04. Mark is going to be one of the Bravo students. We've got 3 slots filled already, and I can't wait for a Bravo class to start this fall. So let's keep going. I can't wait for Charlie class to start this fall. So let's keep going.
That relentless focus on controlling downside and maximizing upside ultimately laid the foundation for the triple-digit returns he would later achieve. If you look at his trading stats, there's an interesting pattern. On the surface, his 2024 numbers resemble those of many top-performing traders. 418 trades, a 31% win rate, and an average winner-to-loser ratio of 3.5 to 1.
Let's get 100% honest here. Let's get 1,064% honest here. When you hear a 30.9% win rate, you automatically think, yeah, this trading plan sucks. I know you think that. I know you think that. I know you think that. Because we're conditioned to look at win rate. That's like the number one thing people ask. What's your win rate? I had, and I kid you not, an 84% win rate. This is early on in my trading career. An 84% win rate selling options. You must have been rolling in the dough, Chris. Nope. In fact, quite the opposite. I lost $200,000. Let me repeat myself. I lost $200,000 with an 84% win rate. Don't tell Mrs. Ewell. She ain't going to be happy about that. With an 84% win rate. How do you do that, Chris? When your risk to return, when you risk 9 or 10 or 20 to make 1, your risk to return is broken as hell. And here, he has a 30% win rate, and his risk to return is, I think he's typing it out right now, 3.5.
But
meaning, for every 1 loss he had, his winners were 3.5 times the size. For me, for every 1 win I had, my losers were 10 times as big. That's a very broken risk to return. Now, let's be very honest here. I don't think you could trade a 30.9% win rate. I don't think you could. I don't think I could. I like a high win rate. Plan M is a 57% win rate. I prefer to win, right? But in this strategy, it's cutting those losers as fast as possible, not giving them any chance. And that's what it takes to be successful, is cutting your losers short and letting your winners run out of control.
But a deeper look reveals that he sizes up only a small number of high-conviction trades. These trades perform dramatically better, with a 60% win rate and an average winner-to-loser ratio of more than 10 to 1. So a significant portion of his returns comes from betting bigger when the odds are strongly in his favor. That brings us to understanding Christian's style of trading. It's interesting how Flanders sizes up on high conviction bets and ends up with significantly better results in those outlier trades. In a typical year, a very small number of trades account for nearly all of his gains.
And this right here is a very difficult thing for most people to comprehend, right? You can literally have one trade. One trade can make your year. But which one of the trades is it? One trade can offset 10, 20, 50 losers. But which trade is it? Now, unfortunately, in trading and investing, we don't get to decide ahead of time if it's going to be a winning trade or a losing trade. Because listen, if you could decide ahead of time if it was going to be a winning trade or a losing trade, what would you pick? Right? You would pick the winners every time, right? You would pick the winners every time, like Graham put hashtag outlier in the chat and Mr. Fielding as well. But we don't get to do that. So we have to continuously make these calculated risk moves. And we may end up with a stack of losers. And then one winner takes off all those stacks of losers and more. And you can grow your, for me personally, in 2025 last year, when I got my Batman watch, my account grew 30% in 5 trading days. In 5 trading days, I watched my account grow 30%, right? And in like traditional investing, that's 3 years of 3 years of growth in the span of 5 days. But that I had no idea when that was going to happen. No idea. But I had to take my risks. I had to put those trades on every time when my plan set up, because you have to follow your plan. Whatever that plan happens to be, hopefully you have an edge on your plan. And then finally, one clicked, paid for everything. It was great.
In 2024, his top 5 winning trades contributed pretty much everything, and without them, he would have likely been only at break-even. One Nvidia trade alone, in which he put his
That's the trade he and I talked about.
entire account with 2x leverage, accounted for approximately 80% of his total profit. In 2025, his top 5 trades contributed almost everything to portfolio return.
He traded, if I'm not mistaken, I saw it earlier, I think he said 400 times. 400 times. And it was the 5 biggest winners that paid for everything. Can you believe that? You put hashtag outlier in the chat if this is clicking, right? You don't have to be the highest win rate, but you do have to at least play the game. And then when you do have your winners, you have to let them run out of control. Let your winners run like gangbusters, because these 5 trades paid for 400 other trades. And if he had got scared out of those 5 trades, he wouldn't have had such gains.
But how does he develop that level of conviction? Flanders credits decades of research. He has built extensive model books and studied the greatest stock market winners going back to the 1930s, analyzing them bar by bar. That process has given him the pattern recognition to spot A-plus setups almost instinctively. Some of the hallmarks of these setups include low-volume VCPs and high tight flags near all-time highs, followed by powerful volume-backed breakouts.
Now, I want you to not get this confused. Don't get this confused. I can't draw a pattern to save my life. And when I see this looks like such hogwash to me. Coming from Texas, that's in my vernacular. How in the wide world of sports are you drawing it like this instead of like this? I don't understand these things. My itty bitty baby brain can't comprehend how patterns work. My itty bitty baby brain, when I see something like this, I'm like, how did he draw that? Make it make sense. But you know what you don't have to worry about? And I can see it right here. The 10 EMA, the 21, and the 50 EMA. Huh. Isn't that interesting that we're looking at the outlier trend template here on somebody else's chart? Now, don't get this confused. When the 10 is over the 20 and price is over the 50, that right there, my friends, is a mathematically sound, undubitably, positively a bullish trend. And you can see it right here, right? 10 was over the 20, and price was over the 50. You can see it. Hands down, nobody can debate it because it's time and price. It's not a pattern. It's not something subjective. The only thing it is math. Because it's just math, it always 100% of the time works. Now, how can I say that with such conviction? Because it's just math. When the price has gone up enough to where the short-term price is higher than the intermediate term price, and price is higher than the long-term price, it is a mathematical certainty that you are in an uptrend. But don't get this confused. Because even though every single giant trend ever in the history of mankind started this way with the 10, 20, 50, we can't guarantee that every time this happens, it will result in that big trend. I want to show you an example on Tesla. Let's go to Tesla. Because in 3 different instances, this happened. This instance right here, the 10 went over the 20, price went over the 50, and it was a 30% gain. This instance here, the 10 went over the 20, price went over the 50, and it was a break even. This instance here, the 10 went over the 20, price went over the 50, and it was a 130% gain, right? I can tell you direction, but I can't tell you duration nor magnitude. Now, why am I spending so much time on this? Because I don't want you to be confused as he's going to go through this talking about the pattern. Because if you look on this chart, the 10, 20, and 50 are right there. Yes, there's 21, but trust me, the 21's close enough to 20 that they're the same. Where did these cross over? Sometime way back here. And then it crossed over right here. Right there. Right there. The 10 went over the 20, price went over the 50. And what happened? Again, I can't tell you magnitude nor duration, but it was the start of another big trend. So don't get reliant on subjective patterns. Do you see why I'm trying to explain this to you? I can't do patterns. You may be able to, but for my itty bitty baby brain, they don't work. What always works is math. That is what we're seeing right here. If that makes sense, put #outlier in the chat. Even if you've done it already, put #outlier in the chat.
He also focuses on significant gap ups driven by a clear catalyst. The best opportunities typically have strong fundamentals behind them: explosive revenue growth, expanding margins, breakthrough discoveries in sectors like healthcare, or major industry tailwinds such as AI-driven demand for semiconductors and data centers. Importantly, Flanders doesn't go all in at the entry. He pyramids into positions as they move in his favor, while continually raising his stop losses to keep risk under control.
Okay, let's talk about this. First, if you need the conviction of fundamentals to help boost your conviction in a trade, by all means, go for it. I'm not going to tell you to not worry about it. But show me on the chart where the fundamentals touched you. Okay? Show me on the chart where the fundamentals touched you. On Tesla, on Nvidia, on Robinhood, on GameStop, on any stock out there. Show me on the chart where the fundamentals touched you. The only thing that happens is an imbalance of fear and greed. When there is an imbalance of fear and greed, that's what causes prices to go up. But again, if you need those fundamentals, that's fine. You do you, boo. All right? You do you. But they are not reflective in the price of the stock. Now, somebody's going to come out here and say, well, it's because of the fundamentals that cause the price to go up. Sure. Because the fundamentals, see, this is a loop here. This is the snake eating its tail. The fundamentals cause people to have conviction. That conviction caused the imbalance in fear and greed. That imbalance in fear and greed caused the price to go up, which then caused more people to look at the fundamentals, if that's what they happen to do, and say, oh, you know what? The fundamentals are strong and the price is strong, which caused more of an imbalance of greed, which caused the price to go up more and more and more. It's weird how trends work, It is a reality. But at the end of the day, the fundamentals do not pay you. The only thing that pays you is the price. The only thing that pays you is the price. And I know that's a tough pill to swallow. But I'm going to give you price over any moving average on this. And I'm also going to give you follow the trend because we've been talking about that.
Flanders' scanning process is more intuitive than mechanical. He starts by identifying the strongest stocks emerging from their 52-week lows, using them to spot leading sectors and market themes.
Ooh, leading sectors and market themes. We just built in Outlier our brand new sector intelligence map. So I'm very, very excited about this because you can actually see now inside of Outlier which one of these sectors is performing the best. So, one day, this would be Friday's performance on here. Well, I like to look at 1 week. You can look at 1 day, but I prefer 1 week. And we can see that tech is starting to pick up. Utilities and energy are really the big winners of the week. The rest of all of last week was a losing situation. Okay. So we can jump deeper into like the energy sector. Okay. Now, jumping deeper into the energy sector, you click it there, it'll take you straight to the screener and it'll show you everything in the energy sector. But you know what? That's a little too much for me. Let's go into the sector list. So it's the same as what we were looking at, but now it's on a list view. If you click the energy on the list view, it'll take you to the industries. Oh, that's pretty cool, right? So now you can say which industry is doing the best. Well, it's integrated oil companies or oil field services in the last week at least, right? In fact, this one's got way more green than this one. So maybe I'd look at integrated oil companies. Clicking this, you can now get the screener and it'll show you right here, energy only, and just that industry. Now we can take it a step further. We can say, okay, I only want to see stocks that have a positive backtest. Now, this bug right here to limit the market cap is going to get reset. So don't worry about that. Give it a couple of days. We're working on upgrades for this. And I only want to see stocks that actually have the outlier buy and sell signal. So I'll hit apply again. And now I filtered it down and I can see 4 of them have buy signals. In fact, 40% of this whole industry has buy signals. And the other several have, other 60% are sell signals. But maybe, just maybe, these are the guys that I want to be looking at. Like Chevron. Let's take a look at Chevron. Maybe, just maybe, Chevron has found its bottom, is starting to turn, and it may be getting a buy signal in the very near future. And in fact, that's kind of what I see right here. Even though it is sitting on a sell signal, the price will show you with the the pink background that it has a bearish trend, but it's found a bottom. Absolutely has found a bottom. And it's starting to get more bullish. Now, it hasn't confirmed the change in trend yet, but if we look down here, the fear and greed has actually bottomed and is starting to get slightly more greedy. In the sector, it's starting to get slightly more greedy. The sector still has bullish breadth here. So put Chevron on your watch list. This may be one that you want to take a look at once it flips to a buy signal. And just like that, we've narrowed down from the infinite universe of stocks, 9,000 stocks that we cover, all the way down to one stock that you can put on your watch list, waiting for that perfect buy signal to come through for you. Pretty cool, right?
He then watches these leaders during consolidations, looking for signs of resilience before acting on a breakout. His favorite setup is an episodic pivot, or EP, a stock gapping up 10% or more on record or near record volume, but with an important twist. The EP must be preceded by a VCP or a high tight flag and occur at a new all-time high.
All right. What do I say? All-time highs are what? All-time highs are bearish, right? All-time highs are scary, right? All-time highs are something you never ever should invest in, right? I feel like that's what I say. Or do I say this instead? But they're bullish AF. Bullish AF. Bullish is Batman. That's right. Bullish AF. Because why? There's nobody out there. There's literally nobody. Let's go to NVIDIA. Oh. Apple's popping up today. Just got a rolling alert. That's what my alerts are coming in on. NVIDIA. This whole way up. Why was it bullish? Because there's nobody there trying to sell it. everybody who's ever bought NVIDIA since the beginning of time, since Jesus last walked the earth, anybody who owns it is making money. Christian Flanders understands that as well. Christian Flanders understands that as well. I understand I may have to make a trade in the midst of all this. What time is it? 8:38. I've actually already got an order on Apple to roll. Oh, look at Apple this morning. That's bullish AF. Look at that. Apple to brand new all-time highs. Brand new all-time highs. In fact, give me a second here. I need to log into my Tradier account. It may have already rolled for me. I put on a rolling order last week that was good to cancel. Good till cancel, which means it's going to stay there until I get until I go in and disable that alert. Give me just a second here. It's almost it's loading in right now. Now let's see if that order got filled. That's what I want to find out. Start live trading. You know what? While we're waiting on that, we definitely said breakout. We absolutely said breakout, which is going to give us our very first bingo on the board. Let's go, baby. First bingo on the board, and we might even be banking and rolling. Banking and rolling here in just a second. All right, we need another moment here. I wasn't prepared. I didn't have my Tradier loaded in. Orders. I have no orders? Oh, I'm in the wrong account. Hang on. I'm in the wrong account. Okay. Now we should see it. Orders. There we go. 405 is what I've got in as the order. Midpoint says 365. So actually what we're going to do is, because it's not only half ATR, but at 1 ATR, I'm going to go ahead and modify this order. I'm going to do it right now live. And we're going to get that done right now. Let's just make it 365. Let's make it 375. Why not? Let's see what happens. I am filled at 378. So I just rolled Apple. So if Joe is watching, actually, you know what? Let me drop this in Discord. Because I just rolled Apple from, let's see. USIC Outlier Trading Room. 7/13/26. Rolled app APL. Order was rolled from the 300 to the 305. Okay, and we've already rolled Apple once, so this is our second from 300 to 305. So this is actually our second roll in Apple. And let's see. Look at this guy trading live. All right, main portfolio over here. So we're now in Apple again for another 360 or 378. Hang on. Sorry, let me edit this. I need to delete this message. Delete, because I didn't tag everybody. For 378. There we go. Now we'll get it. 378. So 375 plus 378. Okay. And then how much is my 305 worth right now? It's worth 2305. So then I add 2305 to what I already rolled for, which gives me, I'm up 31% on the trade. I'll take that. I'll take being up 31% on the trade. Account impact only 1.68% so far, but up 31% on the trade. Okay, so that was done live. Let me disable that alert, because otherwise we're going to continuously get that alert. Okay, we're going to let that off. What about any others? Do I need to roll any other guys right now? Roblox up 3% this morning. I'll take that. Apple up 2%. GameStop recovering a little bit. Okay, it looks like the only thing that I need to do is that right now. Okay, so let's get back to this.
He particularly favours stocks forming bases in the top right corner of the chart after clearing all major historical resistance levels. He prioritised leading stocks in leading sectors, with no one stock that he has traded in the last 3 years having an RS ranking of less than 98.
Okay, RS ranking. This is relative strength. Now, you don't need this particular ranking. What you're looking for are the strongest stocks in the strongest sectors and the strongest industries. That's what you're looking for right there. That's going to get you the relative strength.
Let's now understand how Christian manages risk. He highlights similarities between poker and trading, the most prominent one being able to call it quits on a bad day and not try to recover it all. He says that's the biggest mistake most new traders make, revenge trading with bigger sizes until they blow their accounts. It was because of the lessons from poker that Christian followed stop losses diligently, but still was a boom and bust trader in his initial trading days. That was because, unlike in poker, where you can go all in when you have a good hand, in trading even the best setups fail badly when the markets are not conducive. He would make this mistake again and again, make good returns in booming markets, and continue to trade the same style with the same position sizing when the market turned volatile. In the process, he would get big drawdowns.
There you go. Okay. So Jeff Green says G1, and I think he's right. I think we need a G1 on here for using a stop loss. I saw No More FOMO. No More FOMO has put this in here more than once. I4. Trade what you see. Okay. I'll let you trade what you see, my friend. I'll let you trade what you see.
To counter that, he adopted progressive exposure. If the last batch of trades had high failure rates compared to average, he'll cut back position sizes aggressively and reduce the number of trades. That will shield the account even in prolonged losing streaks.
This can be done automatically, right? When let's say you have a drawdown, right? Let's say you have a drawdown. You should still continuously keep your risk the same as a percentage of terms in the overall portfolio, okay? But you will be trading smaller. It is a fact. You will absolutely be trading smaller. I wouldn't necessarily say cut your risk down by a factor of 10, because then it's going to take you 10 times as long to get back to where you were. But you should naturally trade smaller, just as if you would naturally trade larger on a percentage of risk based on if your account's growing or falling.
On the other hand, when trades start working, he will size up aggressively to make the most of the good times. He also adopted a monthly drawdown approach in which he guarded his accounts with a maximum acceptable drawdown of 5% in any given month. He calls it 5 adjusted R, where 1 adjusted R is 1% of the portfolio. Let's now look at some of Flanders' trades that contributed most of his returns. Here is Nvidia from January 2024, which contributed 8
all-time highs, bullish AF. Now, for example here, you don't have to figure out the pattern. The crossover happened right here, and it also happened right here. So you could have got in here. Maybe you got an exit signal of some kind. You could have re-entered here and then rode it the whole way up. So again, I don't want you to obsess over the pattern here. What do you need to know? The 3 moving averages, and then sticking with winners as they run. Okay. But can you draw a pattern? You probably can, and I can't, and that's okay. I don't like to draw the patterns because this is what Chris would see. And maybe it's going to be like that. I don't know. Maybe. But when I see something where it's like, I do one of thems, and then this, and then what about, hang on. Wait, I see another pattern here, right? What about this pattern, right? That pattern, right? The upside down triangle staircase cheesecake, right? Don't forget that one, and this one too, right? Now, when you see the up row and the down row, then you know you got to row your boat all the way to the moon. Okay, I don't do it. I don't do patterns. I just do moving averages because they're math. But that's just me.
80% of his total profits in the year. He saw this VCP, which had all the characteristics of a good setup: 3 contractions, low volume, tight area on the right, and stock near all-time highs. However, it was lagging the market near the breakout, as it did not break out while the market was taking off. But he shrugged off those worries because he remembered that Netflix had also behaved the same way in 2010, before it took off for a big gain. The stock had already made a big move before the market came up, and was digesting the previous move. He began building the position as the stock tested its 50-day EMA, and then added aggressively at the breakout, eventually allocating his entire account with 2x leverage.
That is ballsy. Putting all of your account in one trade with double leverage. That is that takes some cojones right there.
His stop loss for the fall position was set at the breakout day's low, limiting risk to roughly 1%.
And that's what matters. That right there is exactly what matters. You can have humongous position sizes and yet take itty bitty baby risk. You can take huge position sizes, but you got to know exactly where you're going to get out, right? All right. By the way, what dip did he buy? I'm gonna give you add to winners because I heard him say that earlier. Where is the dip that he bought? You don't buy the dip. You never buy the dip. Why would you buy the dip? You don't know how far the dip is going to dip. You want to buy the rip because for the exact same logic, and I know you're smart enough to understand, by the exact same logic, if you buy the rip, you don't know how high it's going to rip. So I'll give you don't buy the dip on this one.
He exited the trade near a 40% gain.
And Art Chastain, what happened at that breakout? What happened at that breakout? The moving averages, the mathematical formula that always works, always shows you direction, happened. There you go. And Mark, yeah, I like this. Mark, one of our future Charlie students. He bought the dip when the dip done dipping. When the dip done dipped, stopped dipping is when he bought that dip right here. The dip already happened, and he was waiting for the right-hand side of the dip to undip.
Translated into an 80% portfolio return thanks to the leverage, a life-changing trade for him. Yet Flanders considers the exit a disappointment. He failed.
And that's so interesting because specifically he and I talked about that exit. Y'all go watch this video here where I asked him, why'd you take that exit? And he said it really was about being uncomfortable with all those gains.
Fails to follow a key selling principle. Let true market leaders run, especially when they're...
All right, fine, Senior Wahoo. For the love of Scrooge McDuck, I won as bullish AF. There, fine. You feel better now?
emerging from a bear market. Had he simply trailed the position using a close below the 10-day EMA as his exit signal, the gain could have doubled, generating roughly a 160% return on the account. In fact, selling was one of his Achilles' heels in 2024 because he fails to follow simple sell rules, exiting too early and leaving too much money on the table. Had he just followed 10-day EMA for exits, it would have resulted in 24% higher profit. Had he followed 20 EMA as a trailing stop, the returns would have been 145% higher.
That's crazy. Now, really interesting fact. I actually used to follow the 10-day EMA exclusively. Now my trailing stops, in fact, let's go over to that real quick. We're going to be looking at that here on the live stream in just a couple minutes. But my trailing stops are not just the 10 EMA anymore. It's actually when the 10 and 20 EMA cross down right here. Jeez, it's so zoomed in. The 10 and 20 EMA cross down. Now, where did I get this number? We back tested it. Over 7,000 trades. And we found that in our strategy, in our plan, going with the 20 EMA or the 10 EMA had less expectancy than going with the 10 and 20 cross. Let's keep going.
He corrected that mistake in 2020.
I'll give you G4. I'll give you G4.
And the improvement showed up clearly in his statistics.
Now, this is important. This is super important. Do you know your numbers? I know mine. I know my numbers. And for him, maybe he adjusted to that 20 EMA because that was better for him.
His average winning trade increased by nearly 50% compared to 2024, while his average winner to loser ratio improved from 3.5x to 3.8x, reflecting his ability to hold winning positions for longer. The next big trade for him in 2024 was SMCI. Flanders considered this an A+ setup, featuring a perfect VCP and an episodic pivot that gapped to all-time highs on a pre-announcement of strong earnings. He nibbled a tiny size on the 50-day moving average and loaded up on the breakout into all-time highs on this EP, buying at opening range highs on the 1-minute chart near $36, putting the stop loss on the low of the day.
Okay, again, I'll move that hand.
There.
I can't tell you duration or magnitude. because your moving averages crossed over right here and right here and right here. I can't tell you duration or magnitude. So you have to be comfortable with the fact that you might take a loss here and there. As long as it's small, it's not going to make a difference. But before that big win, before that humongous win, the same characteristic showed up. Boom, rocket ships. So you have to be prepared to take those small losses. You have to build losses into your trading plan. If you don't build losses into your trading plan, you don't have a trading plan. Winning is a natural consequence of losing. Winning is a natural consequence of trading and investing. It is a fact. But losing is also a natural consequence of trading and investing. So you have to embrace that side of the equation because it will always happen. You have to be ready for it.
Again sold the stock closer to $68 because the amount of money became very large for him to manage. Trailing with 10 EMA would have given him an exit near $73, and with 20 EMA, the exit would have been at $91, a 150% return on his initial buy. In 2025, the biggest contributor to returns was ABVX, accounting for over 40% of portfolio gains. The stock opened with this huge gap touching all-time highs, up 586% with a 2,500% volume increase.
Holy moly.
On a positive phase 3 drug trial.
Oh, it's a biotech stock. Yeah, I don't trade biotech stocks. And as exciting as this is, and as amazing as this is, it works both directions. I got hit by a 40% down move in one day. A 40% down move in one day because of stupid biotech. Now, could it have happened like this? Absolutely it could have.
He bought a good chunk on opening range highs on the first day, putting 15% of his account on the trade. He then added to the position, putting another 10% of the account here.
By the way, I like to mention this all the time. Don't be afraid of gaps. But honestly, I would have been afraid of a 586% gap. But don't be afraid of gaps, because what you're looking for is if the gap continues or if it craps back down. How do you know this? You put a line on the bottom of the gap candle. If it closes under the gap candle within 3 days, that is considered a gap and crap. If it doesn't close under that, you just set a brand new range and you get to participate in what's called a gap and go. So don't be afraid of gaps.
He then put 30% of his account on this day, bringing the cumulative position to 60% of the account. He moved the stop for the consolidated position to the low of this day. He closed 60% of the position at the close below 50-day EMA on large volume and put the stop for the rest of the position at the low of this day, which got triggered later. The profit from the first buy was over 80%, which added a lot given such a large position he carried in the stock. Flanders' trading style stands out because he clearly distinguishes between average setups and A-plus opportunities, sizing up aggressively only when the odds are heavily in his favor.
Only when the trade is proving that it's working. And I'm proving that I'm human, and I need to take a quick coffee break before I can continue on.
rules say to. Trust what plan implies. Following what I'm supposed to do. Outlier, selling buys. So statistical. Oh.
I don't know what you're talking about. That never happened. Birdie's going to edit it out. It never happened. Oh, I love this. I love seeing this, right? Nobody has a perfectly straight up and to the right equity curve. Look at this. Up 1 month, down the next. Up one, down one. Up one, down one. Now, he had 1, 2, 3, 4, a third of his year, he was losing money. That is the reality of trading. I tell you guys this all the time. If you have a plan, you will make losing trades. If you have a plan, you're also going to make winning trades. Just a fact. Oh, thank you. I appreciate the reminder on the sound. Let me turn that back on. I did that so it wouldn't echo. It's a setting on my end. Professional YouTuber at work. I'll go back to this.
And A+ opportunities, sizing up aggressively only when the odds are heavily in his favour. Despite another exceptional year in 2025, he openly admits that he made numerous mistakes, got chopped up in several trades, and failed to fully capitalise on the rally from the April lows. In fact, most of his gains came during August, September, and October. His results highlight an important lesson. You don't need to trade perfectly to achieve extraordinary performance. If you can avoid catastrophic mistakes, control your drawdowns, and manage risk consistently, you can still outperform the vast majority of traders.
Dude, that's so true. You don't need extraordinary returns. You just don't. But you do have to avoid catastrophic mistakes, control your drawdowns, and then manage your risk with consistency and discipline. That's what you have to do. That's what you have to do. I'm trying not to see. So Johnny says that counts as N5. And Jeff Green says, no, that's 01. I don't know. Maybe we'll just finish the video with one bingo. Maybe we'll just go like that.
Our community takes a similar approach to the markets, although we use the weekly charts, making the process far less time-consuming.
And so what I want you to do as well is the biggest takeaway from this video, and for every video that I put out, is I want you to work on your trading plan, right? Find something that works with your personality and your portfolio. I freely give away my plan every single day in every link, every video description down below, or you can go to outlier.com/USIC plan. It's literally the PowerPoint that we use, but you don't have to use it. And in fact, if it's not for you, that's probably best because it was built on the Outlier data over 7,000 trades. And if you can't use those buy and sell signals with consistency and discipline, that's totally fine. But whatever you come up with, you need to be sure that it fits your personality and your portfolio. You know what else fits your personality? So we need more bingos. We need more bingos here, right? Christian Flanders talked a lot about his high probability setups. Absolutely. And all of his trades had an unbelievable amount of momentum. Right? He wasn't buying the dip on anything. Right? So when he got those trades, he was like, you better believe that these are going to work. You better believe that these are going to work. So right there, that gives you another bingo. Hey, wait a minute. Another bingo? All right, so we've got 2 bingos so far. I was gonna go for market cycle, but then I'm gonna end up with 4 bingos because we're gonna have 1, 2, 3, 4. And I shouldn't do that, should I? If you think I should go with B5 on the market cycle, put hashtag outlier in the chat. If you think I should go with that, put hashtag outlier in the chat, because the only way you can win Big Money Bingo is by putting hashtag outlier in the chat. I don't know, Skinny Buff Guy, one of the Bravo graduates. I don't know. Should I? Mofo says maybe I should. Stacy, I got to meet Stacy last well, that was in May. Stacy thinks that I don't know. Maybe not. I mean, that's just too many bingos today, right? Carol Catherine says you got to do it, right? Johnny says you got to do it. I don't know, guys. I think we're just going to end it there with just 2 bingos. Just no. Of course, I'll give it to you. Of course, I'll give you market cycle. It ain't my money I'm spending anyway. So how about that? We got a double, triple, quadruple bingo, baby. All right, fine. We got 4 bingo winners today, but those bingo winners had to have put hashtag outlier in the chat because you can't win unless you put hashtag outlier in the chat. Now, what can you win? Well, some of the fun merch from our outlier shop. That's what you can win. And in fact, I got to pull up the Wheel of Fortune to see exactly what your prize is going to be. So let's see who the first person is. Our first winner of the day is Wes White. Congratulations, Wes White. Are you cousins with Walter? No, probably not. He's not Breaking Bad. He's breaking good. Wes White is breaking good. All right, Wes. Let me start my email over to the support team. For all of our winners, to claim your prize, you must send in an email to support@outlier.com. I am actually sending an email to support@outlier.com right now for April and Cheryl. I'm going to say bingo winners. And they're going to be looking for you to email in. They'll confirm you actually are the winner before the sending over your prize. All right, Wes, let's see what you've won. Let's see what Wes has won. Wes has won a Trust Me Bro shirt. It didn't specify what kind of shirt. Let's see if we can figure that out real quick. I love the Trust Me Bro collection. I think that's super funny. Trust me, bro, the stock is going to work. Trust Me Bro shirt. That's yours right there, Wes. Congratulations. And if you need a big and tall size, we got you as well. Congratulations, Wes, for our first win of the day. Let's go to the next winner. Who's going to be our next winner of the day? Our next outlier who put hashtag outlier in the chat. Let's see. Who's the next winner? Jaquari Surf? Juakuri? Hang on. We're going to figure this out. Erie Surf. Joak. Maybe it's not Surf. Maybe it's Iris. Maybe it's Joak Iris Earth. That's probably it. Yeah, that's got to be it. Joak Iris Earth. Definitely Joak Iris Earth. All right, Joak Iris Earth. Congratulations to you, my friend, Joak Iris Earth. Let's see what you've won. Let's see. We've got an 80 Delta shirt with a small logo heading your way, my friend. What's that 80 Delta shirt with a small logo look like? Boy, come over here to the 80 Deltas. And you can go to the small logo like this guy right there. There you go. So Joak Iris Earth, when you're definitely not surfing, you are going to have this amazing shirt sent your way, my friend. So thank you for being part of our Big Money Bingo this morning. Let's see. Let's give away. We had 2 more bingos to give away. I don't know. Maybe I should just call it a day right now. Y'all are costing us some money. No, Michael Ross, the boss, he's in charge. He said, we got to keep going. All right, fine. Let's draw again. Let's see. BC Llamas. All right. BC Llamas. Got you. Third winner on the day, BC Llamas. Let's see. I don't know if we have anything on llama size, unfortunately. I don't know if we have anything in llama size, but we got a Outlier Oliver print button down, runs very big, order next size down navy. I have one of these shirts and it does run unbelievably big. It probably runs big enough to be llama size, actually. They do run humongously big. So to see this, go over here with our favorite model, Carlos, and then go to this one right here. And let's see if we have any outliers picture of them wearing it. Let's see. Oh, we do. We've got a picture of Bear's daddy. I think that's Bear, and that's his daddy. Bear's daddy wearing the Outlier all over print. Order Outlier all over button down, runs very big. Order next size down navy. There you go. So you're going to get one of those. You could probably order it in big enough for llama size. Let's go to our final winner of the day. Let's see. Final winner of the day is Mansfield Microgreens. All right. Well, I like my macro greens. I don't necessarily like microgreen. I like a big old green. I like my account macro green. You can have your micro greens. I'll take a macro green, my friend. Just kidding. Let's see what we got here. Let's see what we got. All right. We've got Outlier Oliver print polo shirt. Now the polo shirts run small. You got to order the next size up. All right, good to know. Good to know. And in fact, I do believe Carlos models those. Let's take a look real quick. I do believe. Yeah, there you go. You're going to be looking sharp over there. Mansfield Microgreens with Carlos. You and him going to be hanging out. Let's see. No pictures of outliers in these. Y'all do me a favor. When you get your free merch, send me a photo so I can share these awesome pictures of you guys wearing these photos here on our live stream. If you are having a great time, be sure you subscribe and tell everybody you know about the Outlier channel. Our goal right here is to help you save time, make money, and start winning with less risk. Now, I actually put on several trades, and in this video that's popping up over here. I run through every single one of those trades, and I even rolled a couple. So you want to watch that video to learn more about exactly why we do that offensive rolling. It's such a ninja hack. Watch that video and we'll talk soon. All right. Mansfield Micro. He loves Outlier. I love you, my friend. Is that weird to say that I love the man? Because he's Mansfield Microgreens? I don't know. No. We're all welcoming here on the Outlier channel. My wife would not be very welcoming, but we're all welcoming over here. All right. Let's run through our plan real quick for the day. So let me pull up. I want to look at this page real quick to see what we have on the market. Maybe potentially we have a market set up here. I don't know. So we're going to jump into SPY because we're looking for a SPY and bullish trend, buy signal, fear and greed heat map rising with full stocks breadth. Okay. So we have a SPY buy signal. It is getting more greedy. It's under 70. It's at 54 right now, which is looking good. But we have bearish breadth. Okay, let's take a look at this. Bearish breadth this morning. Yeah, quite a few sell signals are coming through. And we're not seeing more uptrends, and we're seeing less uptrends and more downtrends. So looking at this objectively, I can't put on any new trades based on my trading plan for Plan M. Well, Plan ETF. If we free up some cash today, maybe we could get into Plan ETF. So we did get a buy signal on Qs today. So both of them have a buy signal. What is the fear and greed for SPYs and Qs? So Qs fear and greed is at 47. SPYs is at 54. Okay, so that works for both of these. Uptrend in SPY and Qs. I think the Qs have an uptrend. Let's double check that. Go to QQQ. No, it still doesn't have an uptrend. In fact, Qs are in a sideways trend right now. The 10 is under the 20. Price is above the 50, but 10 is under the 20. So unless it has a tremendous move up, and supposedly it could, right? I mean, anything can happen. We all know that. Qs are off the table. Okay, now I know one thing that we're looking for was the order block. If the SPY is in the value zone, look at all these order blocks right here. So we have lots of bullish order blocks, like double stacking. This is super, super bullish, but we do have this overhead order block. That's within 2%. That's within 2%. This is an area of overhead resistance. I don't want to trade when I got overhead resistance up ahead, right? I want to make sure that I have room to run to the upside. So if the SPY crashes through this order block, which it could, then maybe we could look for something good here. But right now, SPY does have that overhead order block. So if we free up any cash today, which we've already rolled Apple, we can get into Box. Now, Mikey Mike says, can you go over Box and how it works? So let's go take a look at Box real quick. So Box is a new vehicle that we can use instead of SGov. Now, Box, the way that it works is it creates a box. It's basically doing an iron condor at the money on the SPX, I believe. In fact, before I do that, let me go into ChatGPT because I want to give you the correct answer, but I believe that's how it works. Hang on. Explain how the Box ETF works. Okay. All right. So just a second here. Now, can you still use SGov? Absolutely, you can still use SGov. But the problem for me is that I bought it here and I sold it here. I captured the dividend, but while I was on vacation in Hawaii, I completely lost track. And so I was like, you know what? I don't want to deal with this. I don't want to deal with this monthly reset cycle evermore where then dividend gets paid and then it counts as a loss. Because now if I get back into SGov, this is going to count as a wash sale because a wash sale occurs and it changes your tax basis when you sell something at a loss and then get right back into it within 30 days. And I was like, I don't want to deal with that. So I was looking around. There's a new fund called SGVA. SGVA uses the same ultra short bonds that SGov does, but rather than the sawtooth fashion of going up and then paying the dividend, going up, paying the dividend, it removes the sawtooth fashion and just goes up, right? That's what we're after anyway. Box has a similar structure as well, but SGVA is brand new, like brand new. It just came out in June. Box has a multi-year track record of doing this. So how does Box work? You're still doing this. Hurry up. It's a synthetic 1 to 3 month treasury bill strategy packaged inside an ETF. Instead of primarily buying treasury bills like SGov or SGVA, it uses option combinations called a box spread, which is exactly an iron condor, but using the same strikes to target a similar cash-like return. What is it on? I thought it was on SPX. What happens inside Box? Okay, apparently it does it on all kinds of different stocks. Holds multiple box spreads with different expirations. It pays a little bit higher than SGov. SGov's paying low 3% right now. This is paying over 4% right now. Of course, this can change. Let's see. There is some risk to go along with it, right? It's not a pure treasury bonds play. There is some optionality risk to go along with it, but it absolutely works in the way that we're trying to do. Now, if you have a broker that pays a interest on your uninvested cash, that's all we're trying to do here. That's literally the whole point of Box or SGov or anything, is to get paid interest on uninvested cash. If you already have that, you don't have to do this. But this is our new vehicle. When there's an issue with, for me, this issue in SGov with the impending wash sale was what prompted me to look around. So if I need to run into something else, I can. But I don't have to worry about the sawtooth fashion of SGov with the monthly dividend reset on Box. I can just buy it and then sell it later at most likely a higher price. Now, SGVA, when this fund has more history, I want to give it 6 months. When this has 6 months of doing what it's supposed to do, I'll feel more confident about using SGVA, and then we'll just use that instead. So that's the plan. That's what that is, Mike. All right. Let's go through exit signals for the day. Platinum exit signals. Outlier sell signal first. Do any of my stocks that I own have a sell signal today? Literally none. Cool, easy. That makes life super simple. We can go to the next one. We're going to look for what Chris Chains is going to help us remind us of. Let me turn off echo here.
Cost, blocks, earnings, stops, and exit. Oh, that's how outliers roll.
So we're looking for a 10-20 cross, a block, order block being hit that's at least 120 calendar days, earnings, or stops. Now, none of them have gapped up 5%, so we don't have to stress on that. So let's go cross blocks, earning stocks on the trades that I have, looking at them objectively, right? Cross, no. Block, way up here. How old is that block? We do need to measure how old that block is. 220 days. So we will be using that block. Earnings are 16 days out. Stops are not hit on Robinhood. Nothing to do. Roblox. Cross. 10-20 cross. No. There is an overhead order block, but it is currently, as of today, 89 calendar days old. So we don't have to worry about that because we want an older block of 120 calendar days. Earnings are 17 days out. Stops are not hit. So this is a hold for me. Zscaler. Cross. No. Block. This is a baby block. Don't have to stress on it. Earnings 57 days out. Stops are not hit. Nothing to do. GameStop. This got really close on Friday to crossing down. As of this exact moment, they are the same price, the 10 and 20. If this does not have enough momentum by the end of the day and the 10-20 crosses down, I am going to be out. I don't know what's going to happen, but that is my stop out point. If it does go up, and what we can see with absolute certainty is the lines over here tell us what the number is. And right now they're both at 21.97. If it crosses down and the blue line is under the black line, I will for sure get out. But I'm going to let that happen at 2:59 p.m. Central Time. OKTA. So cross, no. Blocks, there's a baby block. Okay. Earnings are 51 days out. Stops, not, I mean, it got close to it, but I'm looking for a close under it. So no, I don't have any reason to close OKTA right now. Apple, we just rolled a little bit ago as it's moving up. Cross, no. Blocks, nothing overhead. Earnings are 17 days out. Stops are down here, nothing to do. Coke. Cross, no. Blocks, this is a baby block, so I'm not stressing on it. Earnings, 15 days out. Stops are not hit, nothing to do. This is a hold. P this morning. We've rolled this once already, I believe. We'll check it later. Cross, no. Blocks, there is a block, but this block is how old? 63 days old now. Now, granted, I'm not saying that they don't work, because look at this. It touched that order block and then got rejected. So does that mean that there's still some sellers right here? Could be for sure. But that's not my plan, is to stress on it. My plan is to look for cross, blocks older than 120 calendar days, earnings 51 days out, stops being hit. So as of right now, I don't have any exit signals for the day. But then again, it's a long day. We'll have to see how it goes. Thank you guys so much for hanging out with me this morning. I will see you this afternoon.
They say you're the sum of the company you keep. 5 friends define you, their wisdom you reap. Well, I looked around at the brains in my crew, they're smarter than me. Thank God it's true. I don't need the answers on my own. Their wisdom lifts me, I'm not alone. I got itty bitty baby hands and an itty bitty baby brain, but I love smart people, they sharpen my game. Everyone's got something, and I'll bring mine. We're greater than the sum when we combine. I married a genius, the class valedictorian. Brains and beauty in one, I hit euphoria. She does the numbers while I crack the jokes. I'm carried by brilliance wherever we go. I don't need the answers on my own. Their wisdom lifts me, I'm not alone. I got itty bitty baby hands and an itty bitty baby brain, but I love smart people, they sharpen my game. the sum when we combine. Brains and wit, they light the spark. I'll bring the laughter, they'll bring the charts. Together we shine, together we grow. I'm proof you don't need to be Einstein to know. I got itty bitty baby hands and an itty bitty baby brain, but I love smart people, they sharpen my game. Everyone's got something, and I bring mine. We're greater than the sum when we combine. Charts. Together we shine, together we grow. I'm proof you don't need to be Einstein to know. I got itty bitty baby heads and an itty bitty baby brain, but I love smart people, they sharpen my game.